This is Scott Bauer with Prosper Trading Academy and your CBOVol 411. Yesterday, slow day, a total of about 39 million contracts, about 22% below recent averages. Calls led puts by a 13-9 margin. SPX rallied again, closed within about 40 points of its all-time high, traded 2.6 million contracts, put call ratio about 1.25 to 1, lower than typical, which is just above 1.4 to 1. VIX 750,000 contracts, call put ratio 2 to 1. Heavy activity in the VIX October 16 put, the VIX October 14 put, and the October-November 19 put spread traded 15,000 times for 80 cents. VIX itself, after touching its 200-day moving average last Friday, has bounced a bit, now sits just above 16. NVDA was the equity leader, 2.5 million contracts, 2 to 1 call put, but only about 50% of average daily volume. This week's 130 calls traded about 250,000. And Target, after reporting earnings and seeing its largest gain since last November, traded over 300,000 contracts, about 8 times average daily volume. This week's expiring 165 to 170 calls very heavy. Just announced yesterday, CBOE said there are new margin relief rules allowing investors to write cash-settled index options against ETFs with the same underlying index. That's an advantageous alternative to covered call writing with ETF options. This is Scott Bauer with Prosper Trading Academy and your CBOVol 411.